Hi everyone, welcome back to Corporate Decoder, a place where we decode the often confusing world of corporate filings. Today we're diving into a report from a company facing a bit of a rough patch. Well, maybe not actually rough, more like their stock price took a tumble. So Bark Inc., yes, the dog toy and treat company, just got a notice from the New York Stock Exchange. It's not good news, but Bark isn't necessarily going out of business anytime soon. They have to try to fix the issues first. Before we start, if you appreciate getting straight insights from corporate documents, make sure you're subscribed. We also have a Discord community linked in the description below where you can share your opinions about corporate news. Let's start with the date, July 10, 2025. That's the day Bark Inc. got a letter, and this letter from the New York Stock Exchange, or NYSE, wasn't a fan letter. The issue is with something called Section 802.01c of the NYSE's rulebook. Basically, the NYSE has rules to make sure companies listed on their exchange are doing okay financially. Section 802.01c says that a company's stock price needs to stay above 1.0 GFMS per share. Bark's common stock price has not been doing so good. The average closing price was less than $1.0 per share over a consecutive 30 trading day period ended July 9, 2000 per stays. Too low for too long, the NYSE can kick them off the exchange. That's a scary event. Now, this notice doesn't mean Bark is immediately getting delisted. Delisting means being removed from the stock exchange where people can buy and sell their stock. Bark has a chance to fix their falling stock price. They've got what's called a cure period, 6 months to get back in compliance with the NYSE's rules. To get back in the NYSE's good graces, Bark needs to get its stock price up by the last day of any month within the next 6 months, or by the end of the whole 6-month period. Bark needs two things to be true. First, the stock needs to close at $1 or higher. Second, the average closing price over the previous 30 trading days needs to also be $1 or higher. So, how can Bark boost its stock price? One option they're considering is a reverse stock split subject to stockholder approval. Imagine slicing a pizza into fewer but bigger slices. A reverse stock split is similar. The company reduces the number of shares available, which in theory makes each remaining share worth more. Okay, let's quickly go over something technical. This report and the press release about it are considered furnished, not filed, under Section 18 of the Securities Exchange Act of 1934. Put simply, it means that while the company is sharing this information, it's not necessarily held to the same legal standard as some other official filings. Now, let's check out the exhibits, specifically the press release related to all this drama. Exhibit 99.1 is a press release from July 11, 2025. It's basically Bark's official statement about getting that notice from the NYSE. Companies have to keep investors informed about big events like this. So what's the story here? Bark got a warning from the New York Stock Exchange because its stock price has been too low. Bark has 6 months to fix this, and they're thinking about doing a reverse stock split. This doesn't mean they are going out of business or anything like that. It simply means that they have to improve their business and stock price. Now, what do we make of all this? Bark is in a tough spot. Its stock price is low and it needs to convince investors that it can turn things around. The reverse stock split is one possible move, but it's not a guaranteed fix. Ultimately, Bark needs to show that it can grow its business and become profitable. The dog toy and treat market is competitive, and Bark faces competition from other companies. To succeed, Bark needs to continue to innovate and create products that customers love. It also needs to manage its costs and improve its financial performance. Bark needs to focus on what makes it unique, the loyalty of their customers and the fun that they add to their dogs' lives. The brand is strong. The execution needs to match the sentiment. Alright, that's our breakdown of Bark's latest filing. What's your take on these events and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out our Discord server linked in the description. Thanks for watching. See you next time.